Okay, so it's been a lot of technical difficulties today, but hopefully this works. I'm gonna be paying attention to the chat to see if my audio breaks up again. So, quick overview of what I've already said. Today I'm gonna be going over my back office. Huh? Am I breaking up again?
Nah, you good.
Okay, cool. All right, so today I'm going to be going over my back office on a challenge account that I'm working on and going over the trades that I did and the risks that I chose to risk as well. So let's go ahead and share my screen. Hopefully nothing messes up this time. All right. So, all right. Let's first go to the back office. I'm going to be paying attention to the chat as well. I'm going to refresh this page. All right, cool. All right, so I'm currently doing a challenge with TFT. I was doing one with my Forex funds, but you guys know what happened with them. They were being mean and yada, yada, yada. So let me see. 218 messages, crazy. Wait, oh, you're talking about my message, I messages. I'm a terrible texter, but that's besides the point. Okay, so I'm currently doing one with TFT and I'm up 4.9%. I was up 5.3%, but I did not close. And that was the same trade that I was up 5.3%, but I closed early. And that was the same trade that I could have passed with. So I'm going to go over that in a few minutes. But I'm up 4.9 and I'm going to be going over some of the trades and losses that I took. So going over into Nas and that trade that I could have passed the account with was this selling position. So on the 5 minute, let's go back to the 5 minute. The previous day, there was an area where price rejected twice and then dropped. And so on Friday, it came back to that same area. And I just like the fact that we have this double top and it still cannot pass that area. So for me, the fact that price has just been moving super weird on NAS and US 30, I took a safer entry and waited until price reached this neckline. So let me mark that off. We're still good. Okay. So let's go to the 2 minute. And sorry, it feels like I'm rushing. I just don't want you guys to hear the same thing twice. But on the 2 minute, I just waited for price to hit this neckline and I entered immediately. I didn't wait for a pullback, which it did eventually do, but it was more of an aggressive entry on the neckline. I was targeting here, looking left. And the reason why I closed early, let me move this to the top. The reason why I closed early is because this psyched me out. So the fact that price was just consolidating and I just was like, let me just secure some type of profit and just trade next week and pass the challenge next week. But here's where that discernment comes in and just saying, okay, hold the position or close it, right? Because there's some instances where it's okay to close early because price is not moving the way it should, but there's some instances where you should just leave the trade alone. And this was one of those instances. And the second time last week where I should just left it alone. And how you can kind of understand when you should or shouldn't close it is if price is doing what it's supposed to. So even looking at this, I'm gonna mark off this low here. Price broke below this low here. And I'm gonna make this price broke below this low and pull back to that low and still come break above it. So we're still following bearish structure, even though we do see these like blue candles for, these bullish candles, right? We're still following bearish structure. So when price is doing what it's supposed to do, that should just give you that peace of mind to just hold the position, right? So going into next week, I definitely will I've been back testing this weekend. So just going into next week, I'm definitely just gonna have a kind of keeping this in mind. So just keeping the fact that I do close early when I shouldn't, I'm keeping that in mind and just really just trusting in my analysis and letting price play out if it's showing me that it wants to. Right. So that was that. So price pulled back to that previous low and still was following barrier structure and hit my target that I could have passed. So if I would allow price to do this, I could have passed it, but it's whatever. Right. But that's why I took that sell. And let's go back to the dashboard. So that was a sell on NAS 100. I don't know where that's at. Wait. Yeah, NAS 100. October 22nd. 22nd. Oh, here it is. I'm like, where is this sale at? So that was this trade, right? So I used a 7.8 lot, and if I would have held it for the remaining points, I would have passed. Okay. I also took a buy. So let me make sure I did. Yeah. Okay. So this was the buy. So I also took a buy that day where, let's go back to the 5-minute. Once again, price was not the cleanest this previous week, but I still wanted to take some type of trades that followed my plan, which they did. They were just a little bit more trickier. So I saw when I woke up, like price is just in this uptrend, and that's cool. We can be coming back to that area, which it did when I took that sell. So looking at this could have psyched a lot of people out. It psyched me out for a minute too, but the fact that price went below the trend and went back within, I know on a higher time frame, that's simply just a wick, right? So on the lower time frame, I can kind of dissect it and see where I can get my entry. And keep this in mind. I feel like I've talked about it before. Let me make sure I'm good on the audio. Yeah, nobody in the comments saying my audio sucks. Okay. So keep this in mind where price likes to come in an area twice. And I'll explain why it does that when I show you another example. So we have this uptrend, price wicked below it and came back within the trend. And so let's kind of hop down to the 2-minute. All right. So on the 2-minute, all right, erase this trend line. On the 2-minute, we can even sell this on the 5-minute, probably easier. Let me go back to the 5-minute. So on the 5-minute, we see price comes in this area once, comes in this area twice, right? So 2 hits, but also it forms this like U formation here, and we took it up to that high. So going back to the 2-minute, we can look at this area and be like, it's also a small support looking left. Support here, support here, support here. A very safe entry would have been taking it at that, I would consider it's like the top of that U or N, because if it passed this area, this high, we're now in a bullish structure, right? So I like the fact when price touches twice because it's almost like market manipulation. People, once they take their position here, they're like, okay, I'm gonna back up and just let my position go. So some people could have said, okay, this is my morning star candlestick pattern. I'm gonna enter in here and my take profit is up here, right? I'm gonna put my stop loss around this area. I have a good 1 to 2 risk reward, right? And when price pulls back and close to our stop loss, we're in panic mode. But honestly, as you see, price could not close below this area. And that's where you have to be super confident in your position. And for me, for some reason, I'm not confident when I enter. It's mainly like when price has been up $2,000 and then want to pull back. I'm like, hold on, we're going to have to close something, right? So that's my issue. But when I initially enter and price does something like this, like I'm cool as a cucumber. All right. So, and I see this quite often. And honestly, I like when it does this because then I'll put another entry in for a higher risk, right? It shows me that it doesn't want to close below this area, and it's a second tap. And sometimes price does 3 taps, right? That's when it's really trying to test my patient on the third tap. But I do that second tap, and then it'll go where that take profit is. And when it does that second tap and then gives me a bullish candle like this above that previous high, even better. Like I'm very cool. Like, you know. So I did take these buys, and let me see. I believe this was my entry right here. So I wasn't right at that right on the touches. I believe I entered like right here, stops in this area, and then I just targeted. It was like a 1 or 2, like that. So it was a small trade. It's within this uptrend, right? So this was the only time I saw some type of entry position within this uptrend. It was after 9:30. So it was at 10:30, around 10:30. And that's how I took that NAS buy. Any questions on either of these two positions that I took? So I took sales here and then buys up here. And if I won it also on Friday, guess what it did over here, right? We broke this area, pulled back, and then we got another sell entry opportunity. So we didn't take that. Okay, I switched to a different mic. Is this helpful?
That's it right there.
It's better now.
Ah, wow. That's insanity, actually. But okay, let me go ahead and share my screen again. I know a lot of people already left because they was annoyed with that lag in audio. Sorry to them. But for those that stuck around, let me share my screen. So that was the NAS 100 trade. And let me see. The next one will be on US 30.
I have a question before you leave, like Nas.
Yeah, what's your question?
Okay, so I hopped on a little late. I don't know if you probably like said everything already. So when you got into that buy, that's right there in the blue, did you wait for, because I be watching on Instagram stories because, you know, yeah, great motivation. So I be seeing that you be getting in and like kind of like the break structure, or you kind of already know the market is going to like break structures to the up or downside. So was that the case for this trade right here? Because I took this same trade, but I took it because the momentum, like it was looking like it was going to break structures to the upside. So like, what made you like get in for a buy?
So it was one following trend. And so this is the trend on the 5 minute. It was following that trend, and I was just waiting for opportunity. And I did kind of discuss it, but I can do like a quick overview. So it was following the trend, and on the 5 minute, like we saw that price did go below that trend, which, you know, kind of threw me off, but then came back within the trend. So on a higher time frame, that's simply just a wick. So going back to the lower time frame in just a minute, I see price had 2 touches in this one area, and I honestly just like that because it's just price basically testing people's like break even. So some people might have entered in here, and then price moved up and formed that huge bullish engulfing, and they might have moved their stops to break even early, right? So price came back again, but as you see, like it's just wicking this area, just can't close below it. So for me, I like when it pulls back twice sometimes. So going down to the lower time frame, I really just entered in after just price action. A very safe entry would have been entering in here when price is breaking structure to the opposite direction. But I entered in a little bit earlier than that. So we have bullish engulfing, pullback, another bullish engulfing. I entered in around here and just had my stops below that previous price action. And then targeted looking left. Targeted these areas looking left.
Okay, perfect. And I got one more question if it's not like,
okay, go ahead.
So I also heard you mention that you like close your entries kind of early. So do you do that? And I noticed that with me too. But like, what's the reason? Like, why is it like kind of like a psychological thing, or like something different?
Yeah, I think it's psychological. For me, like I was explaining why I closed this one early when this could have been the trade that I passed my account with. just because like when I see price just moving in the opposite direction and not just real stern, like, you know, just black candles, black candles. Like if I'm in a sale, I want to see just black. Like if I see some blue, like, you know, I just kind of don't like it. So, but I was saying how you can get that discernment of just staying in a trade is if it's following structure. So like for this one, it broke these previous lows and still couldn't get a break above this area. So I should have felt comfortable staying in. So it's really psychological for me. And I need to get over it because that's just going to hold me back. But at the same time, if I feel like that's a consistent pattern for me and I just can't get over it, maybe aiming for a lower risk to reward, right? So like if I was entering here and have my stops like in this area, and I just did a simple 1-to-1, right? I would have been out of the trade around here. And these are all black candles, you know, but mine was all the way down here, which is more like a 1-to-3, you know. So maybe having a higher risk reward is something I need to consider changing in the future if I can't hold trades when, of course, it's not going to go bearish all the way through or bullish all the way through throughout my whole entire trade, if that makes sense. But yeah,
it makes perfect sense. Thank you.
Yeah, no problem.
Can I ask a question?
Go ahead.
Okay. I want to know, is it's 5 minutes the highest time frame you go to determine your trend? Or do you go to like 1 hour, 4 hours, or more?
Yeah, so I will go to on a daily basis, I'll go to the 1 hour, 15, 5, 2, and 1. I'll go on the daily time frame, really just to get an overview of what's happening overall. So like, let's go to NAS 100. So I mark this as the target because that's what it's looking like. Excuse me. So on here, like price was consolidating in this area. It kind of came back below. It retested this area, almost forming like that M. And we just had this huge push to the downside. So really just going to the daily time frame to get an overall look of what's happening. And then even, you know, once price broke that neckline, we can target areas to the left. And that's why I mark this as a target. All right. So really just using the daily time frame at max to see what, you know, price is overall doing. But on a day-to-day basis, the highest would be the 1 hour, which really gives me a nice overlook of the day. And then the 15-minute to have less candles, but it still gives me an overlook of the day.
Thank you very much.
No problem. And someone in the chat said, did you wait for the candle close on that sell, or did you say YOLO and enter as soon as it went below that neckline? I entered as soon as it closed below that neckline. I was pretty upset. So before I took that sell, I took a huge loss. I took a buy position, and I can't remember where that was. 14827. 14827. Let me go down. And I was like, you know what? The market is testing me, but I know what I'm capable of, which you should not think like that. Let me see, 14827. So I took a buy in here somehow. Oh, must have been like 14827. 8. I took a buy somehow in here. I don't know. I'll have to really kind of go back. Yeah, so it stopped me out. I took a buy in here, but then I guess I went to the 5-minute and just saw this M, and the fact that it's respecting that previous area, I was like, nah, we're not gonna just go out with an L like that. So that's when I took that sell that I should have held. But yeah, I entered immediately at that neckline. I don't use fibs. I'll use a fib to mark like the 50% of the engulfing candlestick, but not to measure where my take profit would be. I might consider adding it back, but I haven't really added it. No problem. All right, so moving on to US 30. I took a trade on September 21st. So on September 21st, this one. So it's about $3,400 profit on this sell. So like I was saying before, those two taps That's 2 taps. So when I woke up, what am I doing? I'm seeing areas where price is constantly reacting to or from. And so we had this area of support, but going into New York, we broke that area and came back to it. This is 9:30 down here, and it was acting pretty crazy. So we had this huge bearish candle, bullish candle, like it's too much, and I don't like it. It just feels like a day I can get stopped out. And that was also news. So we had news at 8:30 that day. So it was just like a lot of movement. And I'm pretty sure a lot of people tried to make profit on the fact that it was so volatile, but weren't sure about the actual direction, right? We're breaking lows, we're also breaking highs. So I waited until I was comfortable and got this pullback to an area that was actually used in the past, right? So now that we're in this area, what am I going to do? I'm going to scale down. So let's go to the 2-minute. Scale down. And let's see here. So looking at this, we have a low, a high, low, a high, a low, a high, right? So price finally broke that structure to the downside. I'm going to just mark off that last low that was formed. And I'm going to put a circle so it's easier to see. Right? So we have that last low that was formed. Price pulled back to that last low and started pushing off, right? I'm not sure why I didn't take the sell here. Probably, I don't know why I didn't, but I took the sell over here. So price pushed off and came back up. And does anybody remember what I said? When price forms like these U's and N's in the market, what does it give us? An area to what? Anybody? An area to target. Yeah, exactly. An area to target. So now that we have this U, bottom of U here, that's an area to target or to feel safe when it passes. And this is an area to target. And that's actually where I took profit at, right? So over here, I took a sell here. And on the 5-minute, I really just like the fact that we had all this rejection and it still couldn't pass that previous low that was formed. These are the kind of trades, honestly, like I don't mind putting in more risk for. Hence that I made like 3.4% on that trade. But these are the type of trades I don't mind putting a little bit extra risk. We have all this rejection. It's still within, still following structure underneath an area of resistance and cannot break that previous low. And once price was doing this consolidation, this was one of the days where I was okay with staying in, right? And once it passed that area, gave me this candlestick, I was pretty like cool, and we were so close to our take profit area, right? So that was that trade. Pretty simple. Even though last week was pretty chaotic. And there's some other trades that I took. I'm just not going to go over them, but the biggest losses I took was Nas on Friday, and it was two big losses on Friday. Friday was just insane. I only made like what $900 after all my losses in wins. But yeah, those are the two biggest losses I took last week. But yeah. So pretty simple trade. And once it passed this is also a U here, right? That's also a U. So if it's true bearish structure, it should go below the bottom of this U, which it did, right? And let's take this a bit further. So someone had asked me, how do I view, do I go to a higher time frame? So on a higher time frame, let's go to the 1 hour on US 30. And this is how I looked at the market last week, right? So on the higher time frame, we have this area of support here, right? We finally broke below and came back. What did this give us? Somebody say in the chat, what did that give us? Nobody knows? No, we're just saying it. Yeah, a U, right? So we have this huge U, right? So I'm just going to circle the bottom of that U. And we came up here. So This time, price was going bearish, bearish, bearish. So this day, this could have, in my head, it could have honestly passed that structure here. If it's true bearish structure, it should come at this area at minimum, but should pass it if it's true bearish structure. But instead, price pulled back up against that previous area. Hence, it likes to move up twice to fake people out. But I circled it red because it failed to take out those highs. It actually formed a lower high, right? But the fact that it did that, it also made another U for us to target, right? This is a U right here. So I'm going to circle, and that's why I have it blue. I'm going to circle the bottom of that U. I'm also going to circle the bottom of this U and put a blue, make it blue, the target. So now for this upcoming week, this is why I had a bearish outlook, because I had two areas to target going into the next week. If it decided to pull back and go bullish, then we're going to be looking for buys. But I had a more bearish bias than I did bullish because price came back and retested, and we have areas to take out, right? So for Wednesday, we took out that one low, and on Friday, we took out that last low. So that's how you can look at the higher time frame to get the overall target. And then on the lower time frame, see how you're going to enter. But it won't always move the day that you want it to. Right? Like even this on Wednesday was very bullish at first, then bearish, right? So just being very patient and waiting for structure and price action on the lower time frame to enter and to target those higher time frame targets. Does that make sense, everyone?
Yes, it does.
Okay, cool. Okay. The last point that I'm going to make is, yes, the target was the 1 hour in this case, but also on the lower time frame, we had areas to target as well. Like I was saying, like these are the small targets. This was the 5-minute target here, but the 1 hour target was down here, which it did reach. So it's whatever you're most comfortable with. Like I was saying, maybe I might be more comfortable with a lower risk reward, but my higher risk rewards also gets hit if I'm patient enough to hold the trade, which I'm not always there to hold. I'm not always patient enough to hold the trades. Okay, so my last point I'm going to make is my risk. So this challenge, like towards the end of the challenge, as you see on my equity curve, we was a little bit choppy in the beginning. So I was up profit about 1,600. Let me speak in percentages actually. So I was up 1.6%, and then I fell below, right? And I came back up, back up 1.6%. So I came below, I went below the initial balance 3 times with this whole challenge. And then it was like a steady increase, right? And for this challenge, the max I risked was 3%, which is kind of high, right? A lot of times people say they're risking 0.5, 1%, max 2, but the max I risked was 3%. And that was in this area, right? But as you see, it's still an increase. Even throughout my losses, it's still a steady increase of me risking higher. And like I was saying before, I only risk higher on setups or my A+ setups, right? I'm giving my trades that are superstars the plays that they deserve, the money that they deserve, and letting my B+ setups get that like 1%, 0.5%. And honestly, that was kind of hard for me to kind of decipher, because sometimes like I just want to risk 3% today, So really sometimes it's about testing the waters. Let's say that you're taking a trade and you're like, this looks like an A+ setup, but I don't want to blow it. Like I'm already at 4%. I don't want to risk 3%. I don't want to risk 2% and be back down or be only up 2% at the end of the day. So that's when you can say, okay, let me just risk 1% for my initial entry. And then once it gives me a re-entry opportunity, I can re-enter at 2% and move my stops to break even for my first entry. And now overall, I'm risking 2%, but overall I'm risking 3%, if that makes sense. Right? So like when that first trade gets into break even, I'm like, well, I can definitely risk more and gain more, with not risking that much. It's my initial entries at break even. So sometimes it's about testing the water that way, or just saying, F it, and I'm going to risk the higher risk on this A+ superstar setup. And I started doing that in this area, not in this area. This area was just 1%, 1.5. This is when I started giving my superstar trades the risk that they deserve. If that makes sense. But only do this if you're comfortable. Risking 3%, it almost gave me a heart attack at first. But eventually I got super comfortable with it when I realized the trades that I were taking. It makes sense to allocate higher risk to your A+ setups. It does. How you be grading your trades A+ setups? I grade it by back testing and seeing what's most consistent in the market, right? So like I was saying with the double taps, oops, I didn't mean to move that. So whatever you see that's consistently working for you in the market and that you're super comfortable with taking, it's almost like those trades where you're like, when you see them, like your eyes light up, like, woo, let me get my checkbook, let me, so it's like those trades that you get excited about. Those are your A+ setups, and they come to you easily and effortlessly. It's going to look different for everybody because I may take a trade that I say is very easy and effortless for me, and you may say is like aggressive for you, or vice versa. So it's really about back testing and seeing what is best for you and what you're comfortable with. But that will be considered your A+ setup. Any last questions? It just turned 9 o'clock. Any more questions before we wrap this up? How do you structure your plans? What do you mean by plans? You're welcome. Okay, you didn't say what he meant by plans. If you meant like my risk management plan, it's basically how I was just saying, like, it depends on the trade that I see, but I have 2 options for what I'm going to risk if I see this or that. And I do not only trade New York. Sometimes I find myself trading London if I'm up and I see a good opportunity, but my best trades are in New York session. Okay, yep, that's how I structure my plans. But thank you guys for joining me. It's been a crazy day of just technical difficulties. But thanks for staying tuned and being with me. And I'll see you guys in the chat and next month in October.